Hello, good morning. Can you hear me? I think we now have a good number of students in the class. So we may. Okay. Once again, good morning, everyone. You're welcome to today's class, and you're welcome to our week five of the November 2025 diet. So you agree with me that the diet is gradually coming closer, and one day it shall be closed. So, as usual, if you are joining us for the first time, please kindly drop your chat, kindly drop an emoji with us, or drop a chat with us to tell us your name and where you have joined us from. Tell us your name and where you have joined from. To get our video lectures, kindly chat the admin or call the admin on any of these numbers: 08023 428 420 or 08123 189 141. To have access to our full video lectures, please reach out to the admin on this line. So, just like we used to day in, day out, we do have a recap of what was discussed in our last class. But before then, just to advise you again to stay focused, stay away from all sort of things that are distracting. Do not be distracted. So have best learning experience. Go away from your social media. This is not the best time to be on social media. Put your phone on do not disturb and engage fully, because this might be your last chance or your only chance to grasp today's concept. So before we dive into this class, let's do a quick recap of what was discussed in our last class. That's week 4. If you know you are present in the class last week, can you please unmute your mic in just 1 minute or so to tell us one or two things you learned from the last class? Let's do this within 2 to 3 minutes, please. Hello. Nobody is responding to me. Are you sure you can hear me? Can you all hear me at all? Please, can you hear me? Hello, can you hear me?
Yes, we can hear you, sir.
Okay. So nobody is responding to my question. Hello. Are we not present in last week class? Hello. Hello. Does that mean that none of us were in class last week? Ah, no, this is strange. This is strange. You must say something. This is not acceptable because it's either it's two things. It's either you guys are not present in class or you didn't get anything from the last class. Let's hear from you, please. You won't move away from this slide until you say something.
So, sorry, what's last week's class? What's the topic last week? Is it income tax?
No, this is financial reporting class.
Yes, I know. Did we do like
Yes, we did yeah, accounting for income tax IS 12,
yes, that's
and
all.
then we did IS 16.
Yeah. Okay. So what you explained last week? You talked about PPE, which is the uh, property, plant, and equipment. And then later on, you talked about income, which the banker, I think one of the banker asked a very interesting question, which you were now helping us to elaborate. So we looked at in the income tax, we looked at the fair income, and I think that's then we looked at yeah. So that's for PPE, we talked about measurement of PPE, the cost measurement, and yeah. So that's
Well, thank you, Agnes. Is there another person who was in class last week presently on the call now? Shoma, you were in class last week. Kendi, Sunday, you were in class last week. What's happening? Okoshome,
Hello, sir. Hello, sir.
hello, sir.
Hello, sir. Yes, sir. Yes, I was in class. I
We
wanted to
can hear you.
contribute now. Okay, yeah. As she
Okay.
rightly said, let me start from where she stopped. Yeah, we talked about PPE. Then from there, we look at the income tax, and in the income tax, we are talking. You gave us the definition, and they also told us how to treat it. When you ask us a question of, if maybe there is a profit last year, and then there is a kind of a tax that is on it. Then this year now there's also what a profit and a tax. So you're not asking us how we'll be able to treat each of them. I think one of them is when there is what do you call it, and an excess provision for last year. You're not, I mean, for last year, how are we going to treat it this year? I was one that answered the question and said that if there is excess provision last year, that's going to decrease our tax for this current year. So I think that is what I can remember.
Thank you, Mr. Sunday. Shioma Okoshome, Kinde, what were your key takeaways from the last class? I think I will start to keep register of students who are present in the class on every class day, so that in the next class or on the next class day, I'll be able to call names directly. Okay, so like I've always been saying that you shouldn't take this class for granted. Don't say because you're not paying. Remember, it costs your time and your data to be part of this class. Okay, and you are going to get the full video lecture, or you already have the full video lecture. This is also an opportunity for you to ask questions on areas you've watched in the video lectures. To ask questions on that part of your study test you've read and then struggling to understand. Okay, so but if you're not challenging yourself, I'm afraid I will not be. I will also not be challenged. Okay, so and the implication of that is you don't have to wait till the exam day, right? You are the one writing the exam. I'm not sitting for any of the exam, so you need to take this more serious than even than the lecturer. Okay, so after the class, lay hands on your assignments, practice them, pick up Pathfinder questions on the discussed topic, ensure you attempt them, and then cross-check them with the suggested solution you have with you. So if you missed the last class, check out our video lecture or chat on WhatsApp with admin on +234 802 3428 420 or +234 812 3189 141. So what are the topics to discuss today? We have just one topic, and this topic over the years, Ican has always, test student knowledge on this topic. Ican has always assessed students' understanding on the analysis and interpretation of financial statements. So, can you analyze a financial statement? If yes, what words are you looking at? But when you hear analysis and interpretation of financial statements, what exactly do you think we are talking about? Agnes, do you want to try?
Yes,
Sunday.
sir. Yes, sir. I
Okay.
can. Financial statements, it now depends on, there are five of it. So the first one, which is the statement of profit and loss, profit or loss, or then you have the statement of balance sheet or the change.
Financial
Sir,
statement of
financial
financial
position. Yeah, then we have the change in equity. Then we have, I think, then cash
statement
flow.
of cash.
Cash flow, then we have note of accounts. Then on each one, then for then I can break it down for the income, for the P and L, we're looking at the income and the expenditures. Then for the income, for the revenue section, we're looking at that's the sales, which is they don't use, I don't think they use turnover again. So that's the income that we received, which is the revenues, the sales, then minus the cost of sales. Then you get your gross profits. Then later on, you now do your administrative, all the other expenditure. If there are FS and there are other, which is the other comprehensive income. So the first one is a profit statement of profit and loss and other comprehensive income. So you can do that like your foreign exchange and all that. Then you get your net profit. Then afterwards, then you do like your tax. I think then that's where the tax applies. That's the CI, the 30% tax, company tax applies. Then when we come to the balance sheet, we are having like the five, which is the assets. Then we have the liability. Then we have the no, sorry, it's three. Sorry, I said five. It's three because if we have five, if income has taken two, then for the statement of financial position, we have three, which is the assets, non-current assets and current assets and non-current assets. Then we have current non-current liability and current liability. Then we now have equity, which is the money that comes from the. Sir, should I stop so the other person can try? Look, I'll just carry on. Okay.
Okay. Sunday, analysis and interpretation of financial statements.
Okay, so for me, just as she said, she mentioned the different components of the financial statement, the five of them. And if I'm to say, when you're analyzing it, you're trying to evaluate the elements of the financial statement, what makes it up the for the particular year, and then the essence of analyzing it for you to do or take a decision. Decision may be investment decision. So when you analyze all the whole element of financial statement from the profit and loss account down to the statement of financial position, the cash flow, the statement of change in equity, and even the note to the account. So when you evaluate them using some financial parameters, sometimes you can use ratio analysis and all that. The essence of that is for you to be able to take a decision over over the position of the organization for that period of time. It will be investing decision or any other decision you want to take regarding the organization. So the essence of the evaluation is for you to do or take this decision. That is what I can say.
Ukosome, Ukosome, Obafemi, Rachel, Yunusa Thomas, Kehinde Shioma, Kairat, Blessing. Blessing, this is unusual of you. You're not saying anything. So what can you all say about analysis? I've not gotten my answer, so that's why I'm still asking question. Analysis and interpretation of financial statements. Yeah, Sunday, thank you. You tried, but at least you can do better. So analysis and interpretation of financial statements. What are you analyzing? What are you analyzing? What exactly are you doing? What do you need to do that? Okay, why Agnes and Sunday have spoken on the component of the financial statements, what you need to do to perform the analysis. Okay, if not still hit the ball on the head in terms of the analysis itself and the interpretation. So what are you analyzing?
Is it the ratio analysis or what are we looking at? Is it trend analysis, sir?
Mhm. So those are the tools that you use in your analysis, ratios, analysis, among others. So when you hear about analysis of financial statements, what they are talking about is the analysis of their financial performance. Okay, talk about the financial performance. They are talking about the statement of the income statement, and maybe some line items in the balance sheet or the so-called state of financial position. Okay, and then when you're also talking about the financial position of an entity, you're analyzing its statement of financial position vis-a-vis to know its liquidity and solvency position. To know its liquidity and solvency position. Why the statement of profit or loss is to know the profitability position of an entity. to know the profitability position of an entity. Okay, so when you're analyzing the financial statement, these are the things you are looking at. Are you analyzing it from the financial performance point of view, or are you analyzing it from its financial position point of view, such like its current ratio, liquidity ratio, solvency ratio, among others. So what exactly are you analyzing? And I haven't got the exact thing, I haven't gotten the exact thing you're analyzing. Then your ability to interpret then gives it the full meaning. It makes more sense when you are able to interpret the numbers, to interpret the ratios. One thing is to be able to calculate or compute the ratio. Another thing is to be able to interpret, to be able to communicate it to non-accountants, okay? And it's making some sense. They can make an informed decision with your interpretation. So Agnes, think about an entity having a current ratio of 0 to 1. What does that mean to you? How do you interpret this? When the industry current ratio is ratio 2 to 1, this entity is having a ratio 0 to 1. How would you interpret this? Blessing,
So,
Agnes, Sunday, okay?
okay, so I was thinking like the industrial standard is 1%. So I will use the industrial standards to measure the company if they are up to it. I don't know if I'm saying it right.
Okay, so let me support you, right? So when you are being told or you perform your financial analysis, you are assessing the liquidity position of the entity. You pick the current assets over current liability. This is your current asset serving as the numerator, and your current liability serving as the denominator. Okay, so you have something like this. You have something like this. Current assets divided by current liabilities. Okay. So if your current asset is 2,000 and your current liability is 1,000, what do you have? You have ratio 2 to 1. Or how many 1,000 do you see in 2,000? Hello?
2.
2. So, and because your denominator, the divider, right, is seen as 1, okay, and you're looking for the number of times you can find the number in the numerator. Do you understand? Agnes, are you following?
Yes, I can understand.
Okay, so you are looking for the number of times the numerator appears, and the denominator appears in the numerator. So if you have 50,000 naira, that's the current assets. I have a liability, current liability of 15,000 naira. So what will be your ratio? What will be your ratio?
1 to 3, right? 1:3.
You mean 1:3?
1:3.
You mean this way? Blessing, is this correct?
Yes, sir. Yes, sir.
Blessing,
Yes, sir.
Agnes, do you think this is
No, sir.
correct?
3 to 1.
Again, sorry.
1. It's the same thing like the other one. We have 2,000, so it's going to be 3 to 1.
So it has to be 3 to 1. So, but is it 3? Is it 3 exactly? You guys are not punching your calculator. It should be 3 point something.
3.33.
So it is 3.33 ratio 1. So Sunday, don't make that mistake. Don't take it the other way. Okay, like I said earlier, you are using
Invite
your
your comfort, sir.
denominator. Yes, look at it here. Okay, so and look at the formula, right? So you are looking at, that's why we call it current ratio. Okay, we call it current ratio. So you are looking at the ratio of your current liability on your current assets. Okay, so that's why I said earlier that the number of times you can find your current liability in your current assets. Okay, so in other words, rather, if you have something like this, so what's the ratio? What will be the ratio here? Nobody is talking. If you are dropping chat, I mean,
1 to 1 is 1 to 0.33.
1 to
0.33.
1 to 1 ratio is 0.33. Are you sure?
Oh, sorry. No, 0.33 to 1. Sorry. 0.33 to 1. Sorry.
0.33 ratio. Do we all agree? Do we all agree? Oh yeah, talk now. Are we confused?
So is it? I'm thinking it's 1 because 1 to 3 because let's just say it's like 3 divided by 9. So it's going to be 1/3.
Hmm. So we know if you are punching your calculator or not. Oh, yeah, Agnes, let's do this together. Punch your calculator. Put 3
correct.
divided by. Sorry. How are you saying? So put your calculator. Punch 3
I
divide
said
by
is correct.
0.3 is correct. What do you say?
Yes, sir.
The way we have it.
0.33.
Do you mean the way we have it on the screen? Oh yeah. Oh yeah, talk. Do you mean the way we have it on the screen this way?
It's 0.33, not 39. I think I can see 39 on the screen.
No. You're not saying 39. It's 33.
It's 33. 33 is correct, sir.
3 is correct. 0.333. You're not in this class. Seriously.
Yeah. So this is how you get your ratio. Okay. So this is the formula. Apply the formula the way it is, and have it at the back of your mind. Okay. This is ratio, and since it is ratio, your current liability will always remain as 1 because that's the denominator. You are looking for one thing, okay, just one item. You are looking for the number of times it appears on the number above, which is your numerator. Is that clear? Hello, is it clear to
Yes,
all?
sir. Yes. Yes,
So,
sir.
Agnes, I want you to tell me if you have something like this. Agnes, if you have something like this, what will be your answer? You have to find the current ratio. And your current asset is 4500, and then your current liability is 105. What will be your answer? Sunday, be ready to tell me if she's correct or not.
So what I have here is 428. Is that correct?
Sorry, take that again. You are calling the ratio. So you are giving me the ratio. So what will be your answer? Yeah, we are waiting now.
So it's 4.2, 4.2, no, 4.3 approximately. 4.3.
4.3.
Yeah.
8.
0.4.3.
Again,
So can I talk?
she's still saying something. Agnes, yeah, for the last time, let me type your answer.
So it's 0.4.38.
57.
Yeah, no, they don't need that last steps. Yeah, approximate it, so that's why it's like that.
So, but you didn't.
Sorry, it's 2. There's 2, so that 2 will be 3, so 0.3.
Okay,
It's
so
not
okay.
AS.
So, is this where your answer stops? Okay, Sunday.
Put is to 1. 0.43 is to 1.
1. Ratio 1.
Yes, sir.
So, you should always put your ratio. If you stop here, you've not got the answer. Okay, so you should always what? You should always put ratio 1. So, do we all agree that this is correct? Okoshome.
Yes,
Yes,
sir.
sir.
Okay. Okay. So, thank you. Now, another type of ratio. Wes can tell us another type of ratio they know.
There's quick correction, quick correction.
Quick ratio.
Quick ratio. So, who is telling us the formula?
It's the
It's
same
current
with
asset. Okay.
Oh yeah, who is talking?
Current asset less inventory divided by current liability.
So, someone should give us our current assets. Oh yeah. Oh, yeah, someone should give us. Someone should just give us a number. Yeah, give us a number. Uh, Nobody wants to talk. Just to call. You guys are funny. So, what should be our current assets?
3,000.
3,000. This is why you guys don't want to talk. Oh my God. We're always afraid to talk. So what should be our inventory?
4,500.
5. So what should be our current liability?
Current liability. I see 2,000.
2,000. Thank God it's you that could give me number. So applying this formula, yeah, classwork. Oh, yeah. in 1 minute. Roll out your answers. In 1 minute, roll out your answers. Oh yeah, what's the answer here? Applying the formula. Oh yeah. Thank God it's you guys that gave me the formula. And it's
So
one of you that also gave us the number.
0.75 is to 1. Ratio 1.
You will not tell me how to put the number.
Okay.
Okay.
Zero
Current, yeah,
point
is
No. It's
3,000.
fine. Fine. Just call the
3,000 less
just call the answer.
0.7, 0.75 is to 1. Ratio 1.
Do you all agree with him?
No. Minus 0.75 ratio 1.
So this is Sunday. So who is this person that is talking now?
Simon.
Simon. Moses Simon. Okay.
0.75.
So who is
Why
correct?
0.75 minus
Sorry?
0.71.
Minus so you support Simon, right?
Yes,
Agnes,
sir, because
you
there's a
support
minus.
Simon.
Yes, minus.
Sunday, do you agree with Simon?
Yes, I ignored that minus before. It's true.
It's true.
Yeah,
So why
I
do you
ignored
think
the minus.
why do you think we have the minus? What's brought about the minus?
Because the inventory is higher than the current
There's
asset,
a
The inventory is higher than the current asset.
which is
there's
very rare.
like
Now
we are going to the people.
let's now go to the most important thing. What matters? Because in your exam, what carries the weight of your score in questions like this is interpretation. Are you aware?
Yes, sir.
Hmm? So your ability to interpret wins the game, and not your ability to compute the ratio. Why some people are good at computing ratios? They will give you the absolute number, the absolute answer, the correct answers. But when it comes to interpretation, they fail. Why? Why? So now let's interpret what we have on the screen. Okay. So we've all agreed. I assume all students agreed to go with Simon on this second ratio. Okay. So starting with this first one that we have here. Why is my screen running too fast? Okay. So who can interpret this first one? What does this mean? What does this mean? How do you interpret this ratio? Yeah, talk now. Just interpret it the way that way is coming to your mind. Interpret it that way. I'm here to correct you. Oh yeah. There's no room for science. Let's be faster.
To me, the company is doing well because it has more asset than liability.
Who is that? Is that still Simon?
Yes, sir.
So put it in a sentence form. So in your exam, if you come across this, they've asked you to do this. You've been able to compute the ratio this way, and you're asked to interpret. So put it in a sentence context. Agnes, they want to try. Sunday, they want to try. Blessing. Ali Hassan, they want to try. Let's hear from you guys. Okoshome, Rachel, Obafemi. Okay, is it Simon that joined as Obafemi? Okay, sorry, Simon is Okoshome, right? Shema, you tried, but you need to nail it just to seal it. So yeah, let's do this and move away from this place. I need one or two more students to talk on this. Then I guide you on what to do. Oh yeah.
What I can, the way I can be able to put it is that 2:1 shows that the current ratio indicates a company that has twice as many current assets as current liabilities.
Yeah, that one is obvious. Everybody can see, everybody knows. But what does that mean to the company? What does it mean to people out there? What decision can the investors make of it? What decision can the shareholders make of this or other users of the financial statement in terms of liquidity? Are you saying the company is liquid enough? Are you saying with this the company is able to meet its short-term debt? Because having a current asset that is more than its current liability, does it mean they can, settle this liability when they fall due, or what exactly? So you need to these points are critical. Okay, so when you're interpreting ratio, when you're telling yeah, it's good to see that the company is doing well. Okay, so a ratio 2:1 means the company is financially buoyant. It means they can settle their liability as and when they fall due. They can settle their liability as that and when they fall due with this because they have assets that are easily converted to cash for which they can use to settle their current liability. So it's not just about saying, uh, yeah, thank you, Robert. That's nice of you. Okay,
So
so
can I say something?
okay,
With the computation we have here, 0.75 to 1, it means the company is not liquid enough to be able to offset their immediate financial obligation. Because inventory take a longer time to convert. Now we are talking about liquid cash that are readily convertible immediately. So with what we have here, they are not financially buoyant to be able to settle their immediate obligation because the asset they have, liquid asset they have, is very low. It's even negative compared to the liability that they're having currently. So that's what I can say.
So you just spoke about the quick ratio, right? Which
Yes,
was
sir.
the last one we did. So we were still talking about the current ratio. Okay, but that's fine. Okay, so again, another thing you can add in your comparison in your ICANN question, you may be given industry ratio, the average ratio in the industry, which I can do a lot. Most of the time, they do include the industry average ratio, which means that in your comparison, in your interpretation, you also have to borrow from the industry average. So, for instance, this one that we have on screen, let's take the um, this one that we have that is lower than the current liability. Let's say is 0.33 to ratio 1. Okay, when you have 0.33 to ratio 1, what does that mean? Basically, when an entity has a current ratio of 0.33 to 1, it means the company may struggle, okay? The company may struggle to get enough fund, enough cash to settle its current liability when they fall due. And in terms of whether the entity is doing well compared with its peer in the industry, taking the average industry ratio of 1 to 1, 1 ratio 1, it means the entity is performing well below its peers in the industry. Okay, it means the entity is performing well below its peer in the industry. You can also add points like the entity should uh, do should come up with a marketing strategy that will make it turn its illiquid position to a liquidity position. So by way of maybe having more percentage of the market share, being able to sell to more customers, so working on the quality products, okay, having less customers negative review, among others. So you recommend strategies, okay, things the entity could do to turn around its present financial position or financial performance. Okay, so you can also even borrow from the fact that the maybe what could have caused the current liability to be that high. Maybe towards the year end, the entity received a lot of items in the inventory for which they are yet to be paid for, or services enjoyed at year end for which they are yet to be paid for. Okay, so you have to also know why the liability is that high. Could it be that the entity has some loans that have, that could be recalled at any point in time, and as such has been treated as a current liability? So it's like you doing a root cause analysis of what could have happened. Why is the entity in this position? But in a case whereby the industry average ratio is maybe 0.1 ratio to ratio 1, 0.1 to ratio 1, that could then mean that why we didn't consider having 0.33 to ratio 1 a best performance, it can also be said that the entity is still well performing above its industry average, given that given the industry average of 0.1 to ratio 1, right? So this could then be that entities operating in this industry are facing external economic factors, or there are external factors affecting the performance of entities in this industry? Do you want to talk about the exchange rates, the instability of the FX rates? Do you want to talk about maybe power? Do you want to talk about government policies? Do you want to talk about environmental policies? Do you want to talk about the socio-economic policy? Among other things that could have been the reason why industries in companies in this industry are not performing well. But despite all of this, one can still say that Agnes Nigeria PLC is performing well above its industry average of 0.2 of 0.1 to ratio 1. So there's no static answer. Okay, so the result of your ratio with the industry average, the performance of entities in the industry on average, we will inform you of how to interpret the ratios. Are we together? Hello, are we together? So what I'm saying here is an entity may have a ratio of 0.33 to ratio 1, and we say that yeah, the entity is doing fine. Not necessarily because their ratio is below the normal ratio of 2 to 1. The normal ratio expected of a company for current ratio is 2 to 1. But there are some industries that their own normal current ratio is 1 to 1. Okay, so you also compare it with what is happening in that industry. Okay, so if these industries are affected mostly by external factors for which they are unable to control, backing out all these factors, one could say, yeah, this entity is really performing well. Okay, so these are the things that you put into consideration vis-a-vis advising the entity, on what they could do to improve their performance. Are we together? Any questions so far? Any question? Any question? Hello? Hello, any question? No question, Abby.
So no question for now.
For me, no question.
Okay. So this topic, like I said earlier, is important at a level. You need to take it serious. Pick up more Pathfinder questions to solve them, and remember, do not cram formulas. It is not advisable to cram formulas. Okay, it is better for you to practice consistently, often and often. With consistent practice, you understand it better. The essence of this topic is to demonstrate your understanding of the financial reporting process, accounting standards, and make informed decisions. To get most from this lesson, make sure you have watched the video lecture beforehand. So unfortunately, a lot of you just come to the class without watching the videos. So that's why when you have been asked if there are questions on the topic, you said no. Okay, so please know that this 1 hour class is not enough for you to pass this exam. You need to go through the video lectures since you are not attending a physical class. And the video lecture is the best guide for you. And it also saves your time. That time that you used on transit to go to physical class, and even in physical class, you will always be distracted. You don't get to, optimize or maximize your learning, okay, because of distractions here and there. But with this, you at a convenient time, you can always open the video lectures to listen. Okay, jot down some notes and come to this class to ask questions. So that's why we have made this class a free class for you. Okay, so that you have been given all opportunities, okay, to pass this exam, so there's no excuse for you. So this course, to understand the various types of analysis that financial statements may be subjected to, and ratios used in the analysis. So we have trend analysis, we have ratio analysis, among others. So for trend analysis, what you are doing is you are comparing the year-on-year performance. Okay, so you have a prior year number. So let's say, for instance, your 2023 revenue is 10 million naira. Okay, and your 2024 revenue is 15 million naira. Simon, Sunday, Agnes, Blessing. If you have to interpret this, how do you interpret it? What do you think for the commercial performance of this entity? Oh yeah. Anyway, because of time.
The,
Okay, go on, please. Go on, please. Please.
I see that in 2023, 10 million, and 2024, 15 million. Now to see the company is growing faster. We made a better progress from 2023 to 2024.
Okay. So the person did well in 2023 than 2024. The person did well in 2023 than 2024. So, and the way you know this is, so to add that, it's not enough to say the person did well in 2023 and 2024. You want to tell us that in 2024, the entity's revenue increased by, okay, so that's what we call financial statement analysis and interpretation. Okay, during your trend, there is a movement of what? There is a movement of about 5 million naira. Okay, so this 5 million, what's the percentage increase over the prior year? What's the percentage increase over the prior year? Is it 30%? Is it 50%? So how do you get the percentage increase? You say what? You say new minus old divided by what? Divided by old. So what do you get? 15 million minus 10 million divided by 10 million. What do you have? What do you have? Oh,
I have 0.5.
in percentage, what does that mean? Multiply by 100%.
50%.
50%.
50%. So don't do old minus new divided by new. Okay? If you do old minus new divided by new, you get a different answer. Okay? So someone should try that. Try the other way formula. Old minus new divided by new. What do you have? And someone else should try new minus old divided by new. And someone else should try old minus new divided by new. So I'm expecting three different answers. New minus old divided by new, old minus new divided by new, and old new minus old divided by new. What do you have?
Sir, can you hear me?
Yeah.
For new minus old divided by new, I'm getting 33.33%.
So is that correct?
33.33%. That is,
So
no, it's not
look at
correct.
it's not correct.
It's not correct.
So whereas I've tried the other ones. So a lot of students do make this mistake in the exam. Okay. So and at the end they will come out and tell you, wow, I did all the ratios, I'm expecting this score, I'm expecting that. But in the real sense, what they have done is wrong. Okay. So because even mere looking at the numbers without doing the ratio, without doing the percentage, it's not easy for you to conclude that this thing increased by almost 50% from what it was last year, right? So if last year it was 10 million naira and this year it increased, they increased your salary to 15 million. By what percentage have they increased your salary? So you divide what you are taking before, you divide it, right? By what? By that amount, right? So you take out what they paid you now from what you have been paid before, and divide it by what you have been paid before. That's how you get the percentage. That's how you get the ratio of what you have been paid now. The percentage increase. Are we together? Are we together? So to get me right, another way to prove this is to take what you are getting before as one. Okay, you take it as a one, as a whole number. Then you add the percentage you got, which is 5%, 50%, right? So if you say 1 plus 50%, that will give you 1.5. Abi? So 1.5 multiplied by what you are getting before, by your previous salary, 10 million naira. What will that give you? To give you 15 million naira. But if you take 1 plus the 0.33 or 33% you got Sunday, and say 1.33% multiplied by 10 million that you are receiving before, will that give you 15 million?
No, it won't.
So you tell your colleagues as well, preach this word to them. They should be careful when they are when they are applying formulas to the ratio, when they are interpreting trend analysis, when they are interpreting trend analysis. So these are the things you need to know on analysis and interpretation of financial statement. Thank you guys for taking your time to join me in class today. We have weekly assignments. These assignments align with our video lectures, and then we advise you, okay, don't just think because of money. Try as much as possible, invest on yourself, invest in yourself, okay, make yourself to be the better person of you, okay. So do try to subscribe to our video lectures and ensure you watch those lectures prior before coming to class. Prior before coming to class. So next week we'll be discussing IS 38 and IFRS 16. IS 38 intangible assets and IFRS 16 leases. IFRS 16 leases and IS 38 intangible assets. To get our video lectures, please reach out to the admin on these two lines. Reach out to the admin on these two lines. Any questions? So far, so good.
So I
Sunday,
have
you
a
have
question. Hello,
okay.
sir.
I hope it doesn't take much time. Go on.
No, so you said we should not cram the ratios. Though me, some of them I easily understand them, but some of them I do cram. So what's the best way to memorize the formulas?
The best way to memorize is to consistently practice them. The more you practice, you don't. So it is more or less like cramming, but that's not the intention. Okay. So all of these I've said to you in this class today. I didn't have any textbook I opened. I'm looking at. But some of these things are what I do in my day-to-day work. Okay, as an auditor, I review financial statement of entity, I review the financial performance, I make decisions, audit decisions on their financial performance as well. Okay, so because I've been practicing these even before I started work, even when I was writing my Ican exams, I do as much as not to cram them. You know, the implication of cramming is you might have crammed the wrong thing. And even if you see someone that corrects you, it's not easily forgettable. Okay, so because that thing that you have crammed is still what you'll be carrying in your head. So imagine me asking questions this morning and you guys are giving me something different. Okay, so, and that's why before you go for the exam, make sure what you are doing is the correct thing. Okay, so cramming, if you are cramming, even cramming itself, cramming requires consistent practice. If you cram something today and you stop talking about it, you stop thinking about it, you can confirm this yourself. You tend to forget it, right? So except someone talks about it in your presence, or maybe you are somewhere and they start talking about it, that's when you can start recalling. Okay, so consistent practice is what you need to get out of this.
Yes, sir. Thank you, sir.
You're welcome. Once again, thank you guys for taking your time to join me in class today. If you have missed our past classes, please reach out to the admin to have this link to join or to rewatch the past sessions. You can also join our Telegram class if you are not yet there. I wish you guys best of luck in your coming exams. Please keep safe and enjoy the rest of your weekend.